Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Monday, the 30th of May. Starting off with the FTSE 100, which I looked at yesterday, but we just nudged up a little bit. The high today so far is 76.45, or rather 76.25, and basically that's the level now. We could assume that that resistance line there from February is around there. End of day close above that could give us the unlikely scenario of a push up to 8,000. Otherwise, I suppose most people still betting on this being the top of the range and then a move down towards the bottom of the range around 7,200. But still the chance of a break to the upside, even if it's the less probable percentage wise. But 8,000 on the FTSE certainly would give most investors in the market a psychological shot in the arm, if nothing else. On to the stocks, and here we're looking at Ascent Resources, which seems to be on a no win, no fee type of arrangement at the moment. You can see that we've got this rising trend channel from September last year. That might be an optimistic top of channel resistance line projection up towards 7p, but at least while we're above recent support at 3.5, there could be a push towards 5p and post-autumn resistance there. But 7 not out of the totally out of the reckoning there, especially with that uptrend line, bullish divergence line that we've got there from December in the RSI window. Moving along to Borland, which Borders and Southern rather, Borland not on the market anymore, I presume. Here we've got a rising trend channel from back in December. We bounced above the 50-day moving average and above the floor of that channel as well, around the 3.5p level, and above that looking for at least 6p, best case scenario here over the next 2 months or so, up to 9p, and only back below the 50-day line around 3.25, really questioning the upside scenario. We've got a bullish divergence line, multi-tested one from October, so that does actually suggest that we're in the middle of a decent push to the upside. On to Landore next, and here you can see that the shares have bounced off the support line there from back in October. There's a bullish divergence line there from March as well. Probably want to see the shares above the 200-day moving average at 24.5. If we can get that on a weekly close basis, that could open up the idea of a 2-month target here up towards 32p to retest February resistance, and decent risk reward given that only back below 21 at the moment, or 21.5 even, would really delay the upside scenario. Uptrend line in the RSI window as well should help things move along. On to a stock which is notoriously difficult to get a handle on, MediaZest, not surprisingly, given the lack of liquidity here, which I suppose you could say that about the whole market. Here you can see that we've had this sideways shuffle along a rising 50-day moving average. You've also got a rising 200-day line, which means that the next time they cross is likely to be a golden cross. That could be in as little as a week or two. And breaker point 1 could give us 0.17 or 0.18 at the top of a rising trend channel from back in the spring of 2020. So all to play for there as far as MediaZest is concerned, and only really well below the 0.07p level, really delaying the upside on that, or the notional upside on that situation. Stock which is looking surprisingly strong at the moment actually is Predator. Although it's had its moments in the past, especially that decline from 16p down to around 8p. Looks like it's regrouped against that uptrend line from December. That's around 9p, and above 9p we're looking for a retest of April resistance around 16p as soon as the end of next month. If you're cautious, you wait for an end of day close above the 50-day moving average, just shy of 11p at the moment. But that 200-day line rising and support points above that, this is looking quite encouraging, at least for 16p over the near term. Early sub 8 really delaying or casting the build to the upside into doubt. Moving along to a stock which has had quite some sort of fiery moments in the past. Here we're bouncing off that uptrend line from July last year at 1.75p, gapped up today, which is encouraging as well on quantum blockchain. Still need to break that main resistance line there around the 2.75p level. That could then unleash the prospect of a top of channel move as high as 4.5p over the next month or two. But at least while we're above a penny and a half, looking quite encouraging on quantum at the moment. On to Seed Innovations, which has rallied through the 200-day moving average quite nicely over the last 24 hours of the market being open. The view now is at above 6.25 pence, which was the Thursday resistance. We are looking towards 9 pence as soon as the next 2 to 3 weeks, maybe even sooner, the way things are going, even sooner than that. Positive here is the way that we've got an uptrend line, bullish divergence line there in the RSI window from March. We've got a rising 50-day moving average at the low, which tends to be a positive momentum kicker. And so 9 pence, hopefully before the end of June, is the destination for Seed. On to Serabi, which has bounced sort of almost out of the blue, really. Here we've got bullish divergence line there from way back in December, which is a solid feature and is the reason why the shares have managed to tick up quite nicely now. Neckline resistance around 41 pence. Above that, we're looking for the 200-day moving average as high as 58 over the next few weeks, maybe by the end of next month. If you're cautious, you'd wait for an end-of-day close above the 50-day moving average at 45 pence, but looks like we've had at least a decent turn backed by that bullish divergence. Just a couple of stocks to go now. First one is Sabre Digital, which is still trying to break that line of resistance from September and the 50-day moving average at 0.28. Need to see an end of day or a weekly close above that to turn this around and give us a target north of 0.6 pence, which is the initial 2022 resistance. Ideally, there's no fresh lows for this situation, which seems quite likely given the way that we've got that line of support there in the RSI window around the 27 RSI level. Finishing off with a stock which I was look at with a sense of trepidation. Here we've got UCOG, which has obviously had that spike to 0.2 and got us excited earlier in the month. Probably now we're looking at a range between 0.12 and 0.17, which is that rising trend channel from October. And if we can get that, then maybe that could be the start of a long-awaited turnaround in this situation. But so far, all we see here are the rallies sold into strength above 0.16, and one would fear that might happen once again. That's it for me today. More updates tomorrow.